Hello, everybody. What are we going to look at today? Well, we've got an exciting market, and for the first time in some time, we've got the AIM and the S&P's actually down on the day. They're down 14, and the Nasdaq's down almost 200, but yet the Russell and the Dow are higher, kind of leading to a real mixed market with volatility just hanging steady here. So I've got a post-earnings trade and a way to use less buying power on a high-priced stock that's fallen out of bed. I'm talking about Meta. That's right, Meta, $659, down over 12%, trading down $92.60. You can see here in the middle of its most recent range, all the way back from call it the beginning of the year, January until now. So you might think I might go with an omnidirectional trade, but you know what? I noticed something in here that I think is pretty interesting in December. So let's take a look at that. December options have a 38% monthly implied volatility. So I'm going to click on the December options. I'm going to go all the way down to the 585 puts. I'm going to go down to the 585 puts. I'm going to look to buy one of those. This is going to be an omnidirectional trade. So I'm going to buy one of the 580 puts, and I'm going to have defined risk. I'm going to sell two of the 170 puts. Now this is a 1-by-2 ratio spread. On a IRA account, it's going to use a lot of buying power. On a regular margin account, it's going to use a lot of buying power. On a portfolio margin account, it's going to use around $2,500 in buying power, even though your max loss is close to $55,000. So I'm going to buy one, sell two, and I'm going to go out and define my risk. Now notice where I am. I'm in around the 15 delta options. So just as a reference, this is going to have over an 80% probability of success, closer to 90%. I'm going to change that a little bit because I'm going to use less buying power than most in a margin account. In a margin account, you can use about $5,000 in buying power. I'm going to use $3,500 in buying power by doing one simple thing, going out and buying the 520 puts. Buying the 520 puts for a little over $2 definitely reduces my credit, down to, well, I got $1.75 for this not too long ago. $1.75, I apologize. You can see that pretty quickly if you go to the follow page. And if you go down to the follow page here, click I agree. You'll go to the bats right here, and you'll notice right here in Meta, I made this trade when the stock was trading a little bit lower than where it is right now. I got $1.75 credit. It's an omnidirect. Great risk reward is what I wrote on there. You can see I've now put in the comments, I put option trades today, so you can distinguish between my trades and Nick trades during the day. But there's my Meta trade. I put it on when the original was around 657. It's only moved a couple of dollars, and yet this spread has moved quite nicely by about 30 cents or so. What's my target on here? Around $1 or so. Now, in a portfolio margin account, we're only using around $900 in buying power for $175 in credit. My max profit on this is actually $1,600. Why? Because at 570, this 585, 570 put spread that I put on would be worth $1,500 plus the $175 I collected. That brings my profit up to $1,675. Nice probability of profit, 89%. Obviously, buying that 520 put reduces the amount of credit I receive, but it changes the amount of buying power I'm using greatly and in my favor. Delta on this trade, small bullish, 349, but as I just explained, if the stock goes all the way down to 570, a number it hasn't seen in quite some time, a number it hasn't seen since it clustered back in April down here, I can make $1,500. So for me, omnidirectional, slightly bullish trade in Meta, catching a falling knife with defined risk. We'll see how it goes. And you know what? You should see how it goes. You should move, transfer, bring your account to tastytrade, the #1 brokerage firm in the galaxy.